was talking to Roy a little bit earlier on, and he was a bit confused with fibs. So I thought the easiest way to do it was to just quickly record you how to draw a fib, and then you can play with it. Best advice, fibs work mainly on hourly and above. So your time frames kind of want to be that way on rather than downwards. The thing is, guys, a lot of people, when they come into trading, they automatically think 5 minute is the perfect way to trade. It's not. It's great for monitoring. It's great for refining an entry, but your decision must come from a higher time frame. Okay. And what you're looking for is a strong move. Strong move, strong move. There's a strong move. There's a strong move. But you want to see some real oomph in the market. And it doesn't matter what direction the market's going in for what I'm going to show you, because you're framing the price, and I'll show you what I mean. So the way you draw it is the direction of the move. So you get your retracement. The hard part is finding out when that move started. So there's a drive here. You can see it very clearly. Where did it start? Well, I would say it started on this candle here. Simply because there's a drive down, it's been pushing up, it rejected the 50, it pushed back to the 50 prior, and then it's rejected it down to this candle here. So around this area is the start of the move. How do you draw it? Well, you just pull your fib up to the next high. Okay. And how do you know if you're in the right place? Well, this is where a little bit of experience and a bit of thought comes into it. Just move that across. You use your 23.6 as kind of your first stage trigger. As soon as the price is start to touch that, you want to be watching. Watch it on a lower time frame, because the beauty with a fib is if you drop it onto a lower time frame and move it across to where you are, it stays the exact same. Okay, so it maps through the time frames. Okay, but we're looking at the hourly at the moment, and the reason that's on FTSE, it's just I've been looking at it this morning, and I'll take you right through it. So here we can see it hasn't broken the 23, so this actual move is not finished. All right, and you know that because it's going do, hasn't broken, it's now closed above. So what you're waiting for is the movement. You know it's going that way. Well, there's a rejection there. It's gone higher again. So you wait for the next red candle, which is there. Hasn't done it again. So you wait for the next red candle, which is there. And that's your boom time, because now you can see a definitive high, a definitive low, and you've just edged it up using the reversal candles as your guide. And as soon as this 23 trigger point has been broken, you know that this is now fixed in stone. That's how you leave it. All right. So you can now put an order underneath this candle with the aim of getting to 50%. Very simple. Okay, get a measuring tool. So where we are, just a couple of ticks under there, down to 50%, about 24 ticks. All right. Did it make it? Yes, it did. Did it breach the highs? No, it didn't. So your stops or your hard stop can be up here out of the way. Ideally, you want to be sort of in and out the market very quick, because your risk to your reward is going to be 1-to-1 or even slightly inversed in this situation. But that is the way you play the game. The other way of doing it is you just wait. You know, you can put an order here where you stop up here and see if it'll just bounce from that level to that level. Okay, there's many things you can do. and you have to be a bit careful with your risk management, because that is key. All the fibs doing here is showing where price can potentially go, okay, but it is giving you an entry point and an exit point that is definitive. You could put an order here, yes, it comes up, catches it, take a bit of heat, comes back down, dances, down it goes into there. But you can put an order there, there, and there. Okay, so opens, so much profit, final exit. And if you're feeling brave, you could even push it down here, but everything evolves around the pivot point, which is your 50%. And then you can also use the 50% because you've got a drive here. If you believe the market is going up, you know it's going to retest. It's just people taking profits and some people on the other side of the position thinking they've got it wrong and getting out, and it just drives the market into a midpoint. So that midpoint becomes a pivot point. So if the price comes down, touches it, you can now open an order and pull away from it. Dead simple. And that bellowing in the background is my dinner, because it's Friday and we always have chips. So happy days. So there you go, guys. I hope that kind of makes sense. But to draw a fib, you draw it in the direction of the move. So the 100% is at the start, the 0 is at the top. And what you're doing is you're looking for retracements, because if it hits the 23.6, all it means is that drive has gone up and that has reversed 23.6%. And it's as simple as that. But once you've set your fib, i.e. here, where you've seen the definitive area as to where it is locked, stays in stone, because otherwise it'll throw the levels out. And if you look, see how it respects the levels quite spookily, and that's why it works. Simple stuff, guys. Something for you to think about. See you again.